let's get back to today's session, and it's my absolute pleasure to introduce you to Millard.
Thanks very much, JP. Appreciate the intro. Very excited to be here at FFECon Week, albeit virtually. We've got a great panel today on a very interesting topic. Just to introduce myself, for those of you who may not have been at our US monthly FFE meetups, my name is Millard. I've been with FinTrail for about 1.5 years now. And prior to that, I was with the New York State Department of Financial Services. I was with that regulator for about 15 years. I started there in the General Counsel's office, and during my time in the General Counsel's office, I did actually spend a lot of time on bank license and charter applications, which would be, on topic for our session here today. And then after that, I moved over into the enforcement area, where I worked on a lot of AML and OFAC sanctions investigations and the remediation efforts of the institutions after the settlements. So that is my story, but the story here today is about the great panelists we have here. We have Ben Gray, the Global CCO at Square, Chandrasekaran from the BSA officer at Varo Bank, and Tyler McIntyre from Bank Novo. So great lineup, and I am going to turn it over to the panelists to introduce themselves to the audience. Ben, why don't you start out?
Thanks so much, Megan. It's great to be here today. I'm Ben Gray. I'm the Chief Compliance Officer for Square. I've been with Square for the last 5 years in various legal and compliance roles. For those who aren't as familiar with Square, we have two financial services ecosystems, one that provides payment processing and other tools to businesses. And then we also have a consumer-facing brand called Cash App that provides money services as well as cryptocurrency and a whole host of other things as well. Prior to being at Square, I was a federal financial regulator for the US government, and I also was in private practice doing banking and financial services law. Very happy to be here today. Thanks.
Thank you, Ben. And we also have Prav from Varo Bank with us today. Prav, can you introduce yourself?
Megan, thanks for the introduction. So I'm Pravin Chandrasekaran, and I'm the BSA officer at Varo Bank. If you don't know Varo, we are the first all-digital national bank that we've gone the route of moving from a FinTech to an actual regulated bank. So we're headquartered out of Salt Lake. I'm based in San Francisco. I've been with Varo for about 2 years, where I joined to build out the BSA program. Prior to this, I spent about 15 years at Wells Fargo. So it came from a lot of kind of larger bank experience, but worked in more of the analytics side of the house. So it was a great transition to Varo. So I'm happy to have this. Look forward to the chat.
Great. Today's panel is Tyler McIntyre from Bank Novo. So Tyler, would you introduce yourself?
Sure. My name is Tyler McIntyre. I'm with Novo. We're a powerfully simple business banking platform. Obviously, the big distinction there is that banking. So on the FinTech side, as you kind of think about it, we're more of the tech learning fin in the position that we are now. We're up and coming and growing. We are tens of thousands of small businesses rely on us every single day to help manage their finances, cash flows, and really provide great data integrations to all the tools that they use. So we make it very easy for them to integrate into tools like Square and then have that real time reconcile with their accounting systems like Xero. So my background is, once again, a lot of tech, but really dove into learning banking. And so, just recently, a lot of stuff in ACH. So, and sitting for my ACAM soon. So have probably a deeper appreciation for compliance than many other FinTechs at our stage do, and kind of what's the roadmap ahead look like for companies as they are at my size and continue to plan on growing into the sizes of the Squares and the Varos of the world.
Great. Thank you, Tyler. Appreciate it. And why don't we just jump right into the topic. Today's panel discussion is US focused, and we're here to kind of have a discussion about banking licenses and bank charters, and when is the right time, if there is a right time, for your fintech to think about applying for a bank charter on their own, or continuing on with a bank partnership type of relationship. So also, we know that a lot of people in our audience here today are financial crime and BSA AML officers. So with that, why don't we start out the topic with a question about the AML program, and what changes, if any, did you need to make to your AML program once you made a decision to apply for a banking license? And I think actually, let me take a step back here and maybe give the audience just a basic foundation on the different types of paths that each one of our panelists has taken with their institutions. So at Varo, Varo has a federal banking license charter. Square has an ILC charter with the FDIC, along with several other types of banking licenses. And Novo, Bank Novo, continues to have a good banking partner relationship. Just to give that as background. So with that, I'll go back to that first question, and maybe Prav, you can talk about how your AML program may have changed once you made the decision to apply for a license.
Sure. I can talk specifically about Varo's journey, and I think for the audience, it depends on a little bit of where you're starting out at. If, for example, if you're a lending company and technically you're a loan and finance company by definition, you may already have bits and pieces of an AML program, and you may be examined and regulated at the state level. But if you're a fintech that's truly relying on a sponsor bank relationship, at that point in time, you're not really a regulated entity. You're not meeting the definition of a covered financial institution. So generally, and again, it depends on your sponsor relationship, but I'll speak kind of in generalities. There's no lawyers, well, there's a couple lawyers on the call, just don't hold me to it. Usually you have some sort of agreement with your sponsor bank, and your sponsor bank is the legal owner of those customers and accounts. So per the regs, they're the ones that are held accountable for adhering to those laws and regulations. Now, your agreement with them might be either A, we're going to cover the onboarding, the CIP elements, the screening, transaction monitoring, or maybe bits and pieces of any of that. But there's no programmatic elements of a BSA program generally that are being required of the sponsor, of the fintech. Now, depending on how the sponsor is kind of checking how well that fintech is executing on it, what I've generally seen is largely it's in the form of audits of how well, or testing of how well the process is working. So you really have to start from scratch and say, we need to build a BSA program from scratch, because the requirement of a financial institution is to have a BSA program that the board is responsible for. And we all know the pillars in the US that have to be established from it. So first, you have to start with the program. You have to figure out, what does a program look like for an institution that doesn't exist yet? What should it look like? So kind of building out, what do you want your org structure to look like in terms of governance, operations, execution, analytics, reporting, but then also kind of backfilling in your pillars. How are you going to satisfy those pillars? So there's a lot of program document writing, policy writing, procedure tracking, and then there's also a lot of system implementation. From what I've seen so far, most fintechs aren't running a transaction monitoring system on their own. They might have some integrations for watch list screening as part of their onboarding, or maybe even an ongoing basis. But if you're going to take that on, how are you going to take it on? Are you going to keep leveraging your sponsor's systems, or are you going to build them new? And if you build them new, those are brand new system implementations. So you have to really consider everything that you need to build a program from scratch, from, again, program docs, policies, systems, people, staffing, and kind of all of your risk assessments that go into it that you weren't doing before. You're really, I hate to say it, you're really taking the exam manual from scratch and saying, how do I build this entire thing? Because that's what you have to turn around to explain to the regulators, that when they ask you every question in that exam manual, you can answer it.
How long did it take you to, to feel comfortable with building out that program once you, I think maybe at Varo, you always knew that this was your path, but once you knew that you were going for applying for a license, how long did it take you to build out that program?
Yeah, so I joined Varo in March of 2019, and I'll be the first part of my my journey at Varo was really figuring out, how do we want to build everything out? Where are we? Where are we in development? How is our tech stack looking? What environments are going to be on? What vendors are we going to be using? So there was a lot of kind of program planning. A big part of it is system implementation. When you move to becoming a bank, what core are you going to use? It's simple questions like that. Is who's going to be your banking platform? Are you going to continue to use your sponsors and kind of borrow it? And then are you just going to plug into their system? So those things have long lead times. You can write policies and procedures a little bit in a vacuum, just isolate yourself in a room for a week and a half, and you can probably get them done. But you have to think of the things that have long lead times, like system integrations, and you might be dependent, like Varo was, where we knew we were also moving to a new core banking platform when we opened the bank. So we had to plan to build everything kind of dual feeding from both our old and our new systems of record. And projects take time. So that's kind of one of the things that you really need to start thinking about early on.
Ben, how was your journey on going for the application? And I know you have the few different licenses and a bank charter as well.
Yeah, I can maybe offer a slightly different perspective. So Square, from the beginning of our company, has been pretty heavily regulated across a number of different fronts. We've had state licenses as a money transmitter. We've had various different types of lending licenses, servicing, origination, collection. And so we've had a fairly robust AML program since we started. That said, I think one of the things that was really interesting for us going through the charter process with the FDIC was lots of the areas that maybe a fintech, when you're trying to move quickly, you don't put a ton of thought into, become really, really important to the financial regulator. So for example, just documentation about how you're doing everything. That's one of those things when you're trying to move quickly that you might not spend a ton of time standardizing how your policies look, how your procedures are written. Those types of things often will require just a heavier lift, even if you've got those processes and systems in place. Just getting them into a format that regulators are going to recognize and understand is a big investment. I think another area that we saw was around model governance. That's something that between a fintech and a bank, there's just a big delta in terms of what's expected around your governance of your AML transaction monitoring models. And so that's, again, another area where there is kind of investment needed if you're going to go for a license. But I agree with Prav that you really can't think about going for a banking charter without having built really kind of all the foundational components of an AML program or a BSA program, because that is absolutely at the top of the regulator's list of what they're going to be asking about and wanting to get comfortable with before they give you a charter.
Yeah, absolutely. Has your program changed since you then received the licenses and the charters? How has after experiencing a few examinations, has it had any effect on your AML program, or just in the growth of things and understanding the direct relationship with the regulator?
I don't think we've seen significant changes yet, but we're also kind of in an interesting spot because our charter was granted in March of last year. So our bank actually hasn't yet opened. So we're sort of still in that phase of opening where there's a lot of different things you have to do. Square was at scale prior to the process for us to get a charter took 3 years. So I would say there was a lot of change over that course of 3 years. But since the granting of the charter, I think it's just been more of kind of the same, investing in these areas that are important to our business, whether facilitated through a bank partnership or through the bank.
And Megan, on our side, programmatically, there haven't been dramatic changes. Obviously, when we were sitting with our proverbial crystal ball trying to figure out exactly what our procedures were going to look like before we had any systems and processes up and running, we've made tweaks to that as is common. The biggest thing for us is we've been saying we're going to execute on a plan, and we now had to execute on it. Our staff this year in the BSA office has gone up fivefold. So our staffing is flipping the switch generates a lot of work, from running your own sanctions, PEP screening, enforcement action screening, transaction monitoring. There's a lot of work that comes with operationally running the program that you may not necessarily see all of that when you're still a fintech running with a sponsor relationship.
Sure, and I would imagine that as you grow, the point you made earlier about documentation, once you're a regulated institution, becomes even more important too, when it's not a small group of people and you're kind of running a larger scale operation. Yeah,
and to those of us that have worked at regulated financial institutions, is knowing documents are discoverable. You need to have working groups with minutes, steering committees with minutes, approvals, and all these docs are things that the regulators are going to want to see. Training plans, customized training by employee type, a training schedule, rosters, percentage of completion rates. So all of those things, just that it depends on you maybe took for granted, or you didn't document as strongly because you're like, yeah, we knew we got it done. And it was an end of the year thing. They're going to ask for completion rates. And, I think the standards that changed in the new exam manual also put a little bit more scrutiny on us and documentation of all these things as well.
And probably one really big factor is, SAR filings. That's directly on you now when you have your charter, right?
It is, and I've heard different relationships that have happened that where some fintechs prep almost a narrative for their sponsor to the other side, which is just referrals go over. But that's a big process, alerting, transaction monitoring, investigations, case management, case determinations, SAR filing, figuring out how to register for 314A because it's still a paper process to do so.
Yeah, so consider. And so I guess let me ask another question, and maybe I'll direct this one to you at first, Ben. Why do you think that fewer fintechs have opted to get their own banking licenses in the U.S. in comparison to other markets? And I think, we've probably touched on some of this in the first two questions, but if you could maybe share a bit more on that.
Yeah, I think there's a number of factors there. The first one is speed. It's much faster to partner with a bank to get a product out, because in that kind of arrangement, you don't have to become an expert in all of these things. You don't have to be an expert in core banking services and in AML necessarily, depending on sort of what kind of arrangement you do. And so for a fintech that's trying to innovate and trying to get out into the market quickly, and expand into areas that are new, it's much faster to work with partnerships. So I think that's one thing. Another thing is the upfront investment. We talked about this a little bit, but it took Square 3 years, and we were at scale with a lot of funding to get a charter. I know it took Varo Bank a number of years as well. And so, getting investment as a startup, you've got to get your investors on board with this idea that you're going to spend 3 years, not be able to have a product in the market, and really just be jumping through hoops and not have a good sense of how long it's going to take or what it's going to take. And so I think that dissuades people from starting their business that way. And then two other things I would just talk about. I think the first is up until probably the last handful of years, there was really a pretty deep skepticism of fintechs, and maybe there still is. I don't know, it depends on who you talk to. And so I think for fintechs that want to be able to kind of grow and not have a ton of heat on them just to start with, they find that using an established bank that has a relationship with its regulator, often for many, many decades, allows them to not necessarily be in the heat of the regulatory spotlight to start with, and maybe experiment a little bit more and innovate in ways that otherwise they wouldn't be able to. And the final thing is just optionality. I think you hear this a lot from entrepreneurs, but people want to have different ways to do things, to find the best person or the best bank to do, to facilitate whatever product they want to launch. And what you find is, in the US at least, many of the partner banks who work with a lot of the fintechs have a specific focus area that they're really strong on, whether it's prepaid or it's lending. And so this model of having bank partnerships rather than your own charter really allows you to find the best suited partner for the product and business that you're planning to run. And so I think all of those things make taking the leap for a charter kind of less attractive in the earlier days. And so you see more people kind of thinking about that once they've reached scale, or in the case of kind of a Varo, where they just know from the beginning that their goal is to be a bank and to be a better bank. And so that's kind of how people find their way there.
Yeah, it makes a lot of sense. I would imagine that as you're starting out, it's a lot easier to kind of get your guidance from a partner bank than it is to have a regulator kind of coming in and giving you the guidance.
Yeah, for sure.
I think it's also, like you're saying, being in the crosshairs, right? Being on the spotlight. And so if you're with the Bancorp or Celtic or one of them, you're a small portion of that, I guess the risk bucket itself, right? When, you have the technology, right? That tech part of FinTech, the mantra that's kind of been going around Silicon Valley for the last decade or so is move fast and break things, right? And as a startup, you kind of need to do that to kind of figure out what is that product market fit, right? When Square probably first started off, they're saying, hey, does a merchant account actually need to be underwritten in every single one of them, right? In the way that's traditionally been done. So there's some amount of risk there before you can kind of figure out, that you're doing things consistently, predictably, and then being able to kind of speed up to scale. And then kind of having a controlled environment where, your blast radius is somewhat contained within, maybe your bank partner or the sandbox that you're in, kind of helps, these startups kind of be able to experiment with things that might not work 100%, right? And then kind of iterate their products and figure out which way that they should go. Especially when a regulators, they're coming in there and they're doing these examinations where their whole thing is, take less shots with 100% accuracy, right? Because in a bank, it's a margin business where if you're off by a couple basis points here and there, it can be catastrophic. And so, the tolerance for errors, I think, is when you're starting off, very high, but as you start scaling and you start understanding the product, the customer set, the feature set, and what you're doing, that error and kind of what you're doing is it starts aligning much more with what a bank, in terms of its tolerance, is for the variation from, or the deviation from, what you're intending to do. So, the bank partnerships, I think, in the early days also help spur some of the innovation here in the United States, as sandboxes do, in the UK and the EU.
Yeah, great point there. And I guess it kind of flows into my next question. Is a banking license a growth requirement for a fintech? And can you succeed without one? And I think you touched on it a bit, Tyler, where you mentioned how, you might be a small percentage of the customer base for a banking relationship, but as you grow, and you may be a lot more of a focus for their banking partner type of relationship. Can that continue? What are your thoughts on that?
Yeah, I think it definitely could continue, right, as you kind of, scale up, because like what was brought up earlier, by Ben, is that many of these banking partners have specialties, right? And as your fintech, starts growing, what we're seeing is a lot of the rebundling of a bank, right? And it's a hard aspect in just getting BSA right, as Prav was saying. Now imagine trying to get BSA, lending, custody, treasury, all that stuff all at once together. And so relying on many other partners, will allow you to iterate with new products as you start kind of rebundling different services into your product itself. And then there's also this concept of, you might have one core product, right? And start talking about embedded finance and other aspects of finance kind of being weaved into some of the fintechs that we see today. Where they might want to just outsource the banking aspect of it. They want to outsource the lending aspect of it. And they just want to stay maybe in, whether it might be, like Robinhood, right? They're huge scale, and they're still relying kind of on a bank partner relationship for their card product and all these other aspects. But I would probably assume that it's very similar to, Square, where they also have this aspect of, hey, there's certain things that the bank charter is going to allow us to do better than other things, but we still have existing banking relationships that will allow us to iterate, grow, and kind of like not have to worry about maybe a core product line, and all the regulation around that one kind of product, if you guys are experimenting with it.
So kind of reminds me of the old saying, if it's not broke, don't fix it. If it's working and you're staying within that certain sort of specialty focus, there's no reason to, for the expense and the time and the legal burden, it works.
Yeah, and there's probably a point in time where the board has a conversation of, hey, is the pain of the partnerships worth the pain and the burden of a charter, right? And that's at some point in time, at some scale, that conversation always happens at a fintech.
And I can't remember if we were discussing it here earlier, but Ben brought up a point that when you're discussing with the regulators seeking a license, they are looking at a 3-year plus plan of what are you doing, what are the products you're going to be rolling out. So, if that's going to change dramatically, or if you are going to be single focused on something that doesn't require a bank charter, if that's your mission and that's your product, great. But if that's going to change and you're going to wander into the space, it's going to be difficult later to unwind and capture things unless you are very well established or seeking a very specific type of charter. You have to know you want to get into this space, I think, before jumping in, because once you're in, you're all in. And there's a lot of requirements that come around it.
Sure. I'm going to jump in because I see a few questions from the audience. We have a question here. In terms of maturation for a financial crime ecosystem, would you need to memorialize the as is, thus acting as an anchor to envision the to be mature AML framework? So, I guess, the question being like, as you move in and perhaps consider applying for a banking license, do you put together what, as you were talking about it, what your future plans are, and the state of your program as it is at the time of the application? How do you handle things like that?
I'm not sure I'm understanding the question exactly, but it sounds like sort of a gap analysis, essentially. Like, is that how you approach a charter? And I think the answer is yes, at least at Square. When we started thinking about a charter, you have to know what you've got to know what you need to build. And so definitely the first step is kind of an analysis of where you are, thinking about your strengths, thinking about your weaknesses, and really kind of being strategic about how you build those pieces. I think in the beginning of the process, the bar is lower. You know, it's provide us your BSA policy, it's show us that you have a chief compliance officer, those types of things. But obviously, as you start to go through the process, and you clear those hurdles, the hurdles get higher. And so I think, you know, it's a continuous process. It's not like you start at the beginning of the charter process and you know exactly where you're going to end up. I can tell you from our experience, it is very much a collaborative process with the regulators, where you're kind of constantly going back and forth on different areas, and kind of discussing where they need to be, and changing your tolerance. So it's definitely a continuous process.
If I could add, I think there's two parts to this question. If you do seek a bank charter and you become a bank, it's actually interesting when at some point you actually have to acquire your customers. And it looks a lot like an acquisition that any other normal financial solution would go through, because legally they are the sponsor bank's customers and you are acquiring them at that point in time. So you're actually acquiring customers, and then that's how they become your customers. The other parts of it is, I think maybe where this question was going to was the program. Do you need to document what the old program was doing versus what you are doing? Maybe a little bit, you know, and you're going to get asked around how are you dealing with your BSA responsibilities during that transition. But you have to also understand that, like for us, I'll pick on Varo, our sponsor bank's BSA program is designed and it should look very different than ours, because their business model is to bank fintechs. Our business model is to bank consumers. So our programs are different. Now I don't think you want to get into too much of a, this is what they did, this is what we do type of conversation, because you can even having differing regulatory authorities as similar as we do. Our sponsor is regulated by the FDIC, we're regulated by the OCC. You can raise questions about approaches. So you really want to focus on what does your program look like going forward. Also go back and look at some of the regs around grandfathering, like with CIP and elements like that. So how are you documenting that acquisition? What are you acquiring as is? What gets rescreened? What do you rework when it comes over? But you also have to consider, do you want to build a program based on how your sponsor did it, or how do you want to build a program based on how you want to do it, just with the knowledge of why it was done a certain way in the past and what those changes are going to cost you and impact your customers potentially?
Yeah, I think that's such a great point. And I also think that's a great point for fintechs who are working now with a partner bank, and maybe not at the point where they're ready to apply for their own license, but it's an idea that is out there. So, do you build your program now based on what your partner bank needs, or based on a little, something with the idea of applying for a license in the future, having that idea as part of the base of your program too? Is that a consideration at all, or was it?
To be honest, personally, I built the program based on what Varo is and what Varo is planning on becoming. We did have a lot of considerations just on how do we deal with the transition. The nice thing is it was pretty simple, to be honest. It was a pretty simple acquisition and transition from our sponsor, where we knew we were going to redo certain things because it was going to be incredibly complicated to try to document doing it another way. And I've been through very messy mergers and acquisitions. And you can, if you've got folks that have experience in that, try to simplify the process. And if you're willing to, redo work. So you don't have to explain what someone else did. If you can afford to do that, it's a lot easier to explain to your regulators. That's
great advice. Any other kind of thoughts on that, the road to the application while you're working with the sponsor bank?
You're going to have a transition period, so have a good relationship with them. Be able to pick up the phone with the BSA officer over there, when you're on the 314 network, get plugged in with your FIUs. You're going to have crossover things. What if you notice something that predates your acquisition? Do you tell them? If you're still sitting on their systems while you're migrating off and they notice something, how do they tell you? So those things will help you out. And also, if you've got a good relationship, they've already been doing the job. Pick their brain. What are the typologies they've seen that you should be worried about?
Yeah, that's great advice, right? They've already gone down that road, and they're right there for you. So you've got a perfect channel. I'm wondering if Ben, if you could kind of talk about your, the road to applying for the license and key factors and key challenges that you faced as well. I know you've got at Square, you've got a couple of licenses and a bank charter that that you chose specifically because of the unique sort of foundation of Square.
Yeah, it's been a really interesting journey. I think at Square, we're constantly thinking, I talked a little bit about this earlier, but optionality and how do we really set ourselves up in a way where we can move quickly, where we can have the most different kind of paths to take and then decide which one is the best. So the ILC process for us started over 3 years ago. We started to think about the fact that many of our businesses, all of our businesses across the board, not all, I should say all of the money moving businesses involved bank partnerships. And that's obviously a bit of a vulnerability, and to the extent that at a certain point there's competition that gets involved and otherwise. And so the ILC for us was an interesting charter. At the time, we owned a company called Caviar, which is a food delivery service, and is not financial services in any way. And the ILC is a flexible charter in the US because it is federally chartered, or it has federal deposit insurance with the FDIC, but it's actually a state chartered bank out of Utah. So it's a bit of a hybrid. It doesn't have Federal Reserve oversight, which provides a little bit more flexibility in terms of the business lines that a company can pursue. And so for us, that was an appealing thing. So I would say that was one thing we really wanted to innovate. I think the other thing that happens at scale is your businesses start becoming a bigger part of your partner bank's businesses, which means that the scrutiny that the partner banks are receiving is really your scrutiny, but there's a bit of a sort of a middleman relationship between the regulator and your business. And at a certain point, it actually strategically makes a lot of sense to be able to represent your own interests with the regulator to really get them comfortable with the team and your products. And so for us, that was appealing. We felt like that would drive more innovation, stronger understanding of our products with regulators. And so that was another reason we looked for kind of a more direct regulatory relationship. And then, the other thing is just scale and financial impact. The bigger you get, the more cost leverage you can find in being your own bank rather than having kind of partners in between. And also, many of these partner banks may not have sort of the technology stack you're looking for, or might not be able to scale at sort of the pace you're looking for. So there's also some operational risk there as well. So there were a number of different factors. Square is interesting because we love our bank partners. We have no intention of stopping having many bank partner relationships. We really see this as a hybrid kind of approach, and that's what's going to work for us now and well into the future. So this isn't sort of like a take all of our relationships and replace them with the charter. It was really additive for us. In terms of challenges, I think we were one of the companies trying to get an ILC charter for the first time, and now it's been 15 years. And so there was pretty deep skepticism in fintechs being able to get this type of a banking license in the United States. And so we had to kind of wade through just an unfamiliarity with the process of chartering a fintech. And so that was one thing. I think also just the investment and the time it takes to do these things. We are used to working at a really quick pace, and generally these processes are just not quick. And so I think that there's lots of stops and starts. And so those were some other challenges, but a really interesting process for us. And I think we're excited to have it as just one more option as we continue to grow as a company.
Yeah, I will say the ILC charter kind of brought me back to my banking law hornbook days. But it's great to see with fintechs, it's the right charter for your business, and you found it. So I think that's a great example for everyone out there. And just listening to you, it's really interesting, because as much as it becomes that big moment when you decide that the banking license is right for your company, it really does sound like there's a natural progression from when you're a startup and you find comfort in having that cushion between you and the regulator with the banking relationship. As you grow and mature, at some point you kind of want the direct line right to your regulator, so you're not necessarily kind of always going between a mediator. So as much as it can be, a long haul and quite a regulatory burden that you take on, it's kind of sounds like from a lot of this conversation that in some way it just becomes the natural next step, and you know when you know.
I think that's right. I think that there's a confidence that comes after a certain period of time running your business and really knowing what your products are, and being comfortable in what you've built up to that point, your AML program, your FinCrime program, being one part of that. And so being able to really explain that in your own words, there's value there at a certain point.
Yeah, thanks. Here's another question, and maybe Tyler, you can take a shot at this one, but I'm sure everybody kind of has some thoughts on it. When looking forward and considering a banking license, is data compatibility a big factor? I think it's really critical to make sure that when you have a banking partner, that the flow with data is working consistently with that banking partner. But is moving on to apply for your own license, is data compatibility a factor in any way?
I guess the way that I look at it, which Ben kind of brought it up as well, which is that you can have this kind of approach where you can still love your bank partner without having to break up, right, and get a charter. For us, we have a very unique relationship with a small community bank out in Boston called Middlesex Federal Savings. We joke that the CEO of the bank is our third co-founder. And what really allowed us to do with that is, rather than us going to the Bank Corp and going to Cross River or Radius or any of these other bank partners, we worked with somebody who never had kind of the vast intention, right, to kind of work closely with. And what that allowed us to do is kind of co-create a lot of the product together, right? In the same way that we talk about, hey, how does the BSA program kind of evolve, right? Because what we've heard here across the board is, what regulators want to see is not, a fixed in stone, like here's all of our documentation, but here's the progression of how our business has evolved, and here's how our programs have evolved, and here's how the partnerships have evolved. And at a certain point, that communication is also important to kind of bring the regulators into it as well. And we've met with the OCC Office of Innovation, but we've also had direct contact and presentations with the OCC, which is the governing body of our bank partner, just to explain kind of, here's some of the things that we're thinking about, here are the things that we're doing. And so with that, we kind of leverage the 130 years of relationship and operational experience that they have with the OCC, with the new products that we're looking to bring in market, and kind of try to say, look, we understand that there's a way of kind of looking at things traditionally, but like you said, is that data compatibility is we have a lot more data on our customers, and the OCC might in that area has ever seen getting an understanding of our customer base, right? So we can tell you that, hey, average balances are increasing 2%, on Wednesdays instead of Fridays, this month. And I think a lot of fintechs are enabled by that data itself. And so as you work with it, it's not only the data that the fintech has, right, and being able to kind of bring it up, but also using that data and communicating and building with the bank a better kind of relationship between the two, right? And so is that where you can kind of open up the Komodo and share dashboards and insights and saying, hey, here's kind of like impacts to our business that might impact you guys. And so I think it's a combination of both. What Prav was saying is have an excellent relationship with the people who've been doing it for decades, right? A bit of what Ben's saying is that when you're thinking about a bank charter, for us, it might be 10 years, 20 years out. We don't know yet and how these things evolve. It's just not on our roadmap for now because we have such a strong relationship with our bank partner. And the way that we've co-developed it is very different than us maybe going into kind of a herd of 50 other fintechs that all work with the same bank program and trying to say, hey, can you make a little tiny exception for me because I had this new idea. And then the communication between all that and making sure that there's kind of three legs to the stool there, which is the fintech, the bank partner, and the regulators are all kind of equal parts of keeping the innovation and what we're working on stable.
Do you find that you're able to share that sort of kind of innovation and the data that you might have that traditional banks may not have? Are you able to share that and kind of give the regulators a bit of an awareness on that? I mean, it's of great value, but are you able to kind of communicate that?
Yeah, I'm sure, it's one of these things where, maybe we're too small of a scale, right, to really kind of be, at some point in time, every single fintech is going to need to be regulated if they have an outsized impact on the financial services, right? Like indirectly or directly, whether you are a direct access participant and you're a critical, clearinghouse for securities, like whether you're chartered or not, there's one way or another that when you get to a certain point, you're going to need to get licensed, chartered, or whatnot. So taking a step back and talking about the regulators and kind of, what's kind of important for them, maybe they don't want to kind of dive in as much, to our program because, we're just not at that scale yet of, and we focus on very secure products, depository accounts, et cetera, not on the lending side. But an example of where that data could have been useful is when coronavirus, kind of came in, the pandemic, and kind of what is the impact to these businesses, right, in our portfolio. We're able to run trend analysis to look at each individual account by NAICS code, by all this other stuff, to actually forecast what is the impact of the deposits that we have at our partner bank and how that might impact their balance sheet, right? And so we knew that 76% of the portfolio was relatively strong compared to the other aspects, which were, and this was prior to PPP and things like that. So we were able to run a lot of this analysis and share it. And so, I think having it is just, an additional reinforcement of, we have a good understanding of the risk associated with the program that it poses to the greater financial system, to the customer, and to the partner bank.
Great. And what about, have you, and this question is for everyone, the same type of innovative techniques have you been able to use them within the BSA AML program and share with the regulator? How is that working out for you?
Yeah, I can jump in here pretty quick. So our bank partner uses an existing system, right, for an existing system for their transaction monitoring, and we have our own that we've built kind of in-house as well. What we ended up as kind of PPP came out, as well as a lot of essentially UI benefits, so unemployment benefits. What we were able to do is within 24 hours of us actually understanding and looking at certain typologies, we were able to create new rules in our system that were actually catching unemployment fraud that were using business accounts prior to their system, and an existing, multi-billion-dollar vendor wouldn't have been able to ship that out for probably another month or so. And so for us, we were able to, as a FinTech, quickly jump in there, put in the controls that were needed to kind of have a better understanding of, this kind of possible SAR filings that the bank may need to file for, or even account closures, and provide that information back to the bank within a 24-hour window. And so we were able to quickly kind of iterate with them, and being a technology provider to go back and say, hey, this is kind of how we can help. And I know Square, like I've been impressed in kind of, you look at PPP, right? And a lot of these other type of programs, like, FinTechs were able to quickly jump in there when banks just didn't have the infrastructure, the systems to be able to process some of this stuff.
Yeah, that's a great example, because you have, you've got your partner bank with the kind of regulatory requirements on the transaction monitoring, and it sounds like because of that, it gives you the freedom to kind of use more innovative types of tools that you can find typologies, because you don't kind of have the burden of being responsible for the transaction monitoring rules and thresholds that traditionally are required.
And as Prav said, their rules are based on retail customers coming into a branch, right? Or, say Bancorps is based off, banking other FinTechs. For us, we're small businesses. And so when we see an unemployment benefit hitting an account, that already is abnormal, right? And so, we're able to kind of customize our transaction monitoring system to be much more customized, because we know and we understand our customers, and we have all that data to even understand fluctuations within their transaction patterns.
Are you Ben or Prav, are you using any sort of similar types of tools?
Yeah, certainly. I mean, I think most FinTechs will find that their products look different than what you're going to be able to find off the shelf. And so often you'll have some kind of a hybrid between maybe a tool that you can buy and that you then have to customize. But agree, I think access to data and kind of real-time access to your customers and really understanding what they're doing allows FinTechs to be really agile in how they do these processes that are, maybe a little bit more traditional, like done in a more traditional way in a banking institution.
Great, thanks.
I think there's a couple different tiers of institutions we're talking about. I mean, if you're in the $1 trillion asset tier and above, you've got an analytics team, and that team's got a lot of capabilities. When you're a lot smaller, you may not be able to afford one. It is expensive and it's difficult. And as a FinTech, you've got more advanced technology that's a lot easier to integrate, versus you're not on mainframe, you're not on a green screen system, you're not trying to find a retired COBOL programmer to make this work. So there's a balance of it. I mean, we took a little bit of a hybrid approach where we went with a pretty tech forward provider to support our transaction monitoring. So they move very quickly, but on the other side, we have the capabilities to move even faster and prototype things in-house. So I feel like we have some of the stability that's easy to explain to our regulatory partners, and also gives us the QC and the program stability, but we can also expand up and down as we need to.
Great. Wow. I think we've got to wrap up our hour. This was I mean, I could go on all day, but it was a great conversation. But I think I've got to leave a few minutes here for JP to wrap up our hour. I thank you so much. Really was great to have the perspective from the 3 different viewpoints, and it's definitely going to be a topic that I think is going to be on a lot of people's minds as fintechs grow and develop in the future. So thank you.
Thanks, Megan.
Thanks very much.
JP.
Brilliant. Thank you very much, Megan, Prav, Ben, and Tyler, for sharing all your practical experiences. It was a fantastic conversation. And thank you for all the time that you put into preparing the session as well. I know these aren't easy, particularly as virtual conversations as well. Hopefully you found today's session valuable. I know I certainly found the conversation interesting. So thank you for joining us, and we hope to see you at the sessions tomorrow. If not, I wish everyone a very Merry Christmas.